Lovely to have you on the program. And so obviously the company is a major buyer of steel, aluminium and plastics to use in your products. And higher raw material costs are really weighing on these earnings, aren't they? So do you expect this to continue in the year ahead?
Yes, hi, Maryam. So for raw materials, what we've communicated to the marketplace is that in 2012, we expect raw materials to be up in total up to about $500 million Swedish crowns, so SEK. Most of that is driven by the petrochemical-based raw materials. So with oil at $118 a barrel and the implications of that around resins and plastics, that's the majority of where the increase is coming. A little less this year than what we'd seen previously in the last 2 years.
And so what sort of provisions are you making to deal with these higher costs, particularly the volatility that we could see with oil prices in the next few months over the next year must be something you're concerned about?
So what we've been doing, of course, with what had been over the last 18 months or so a fairly significant and dramatic rise in commodities is we've obviously been trying to work that through the marketplace through a series of price increases.
Yeah.
And that's partly what you're seeing in the results is the effect of all that hard work in the operating units of getting the prices ultimately worked through the value chain and to the end user. So we've passed through some of those raw material increases. Candidly, a big part of it, you don't pass them all through, so you have to improve your productivity to offset a significant part as well, and the team has done a good job in that area.
So you're passing on a lot of those costs, as you say, through the price increases, Mr. McLoughlin. You also have cost-cutting plans, specifically to close some of your 35 plants, mainly in North America and Europe. How are those plans going?
Actually, quite well. We're on track. We communicated to the marketplace a fairly significant restructuring plan at the end of last year that will carry through the next 3 or 4 years to make sure that we continue to operate with a low-cost position. And so whether that's manufacturing footprint, asset optimization and utilization, leveraging the global scale of the company in purchasing, manufacturing and R&D, and reducing overhead and fixed cost, all three of those components are moving according to plan.
But you are seeing strong demand in Latin America, aren't you? Are you confident that will be sustained in the year ahead?
We're confident that Latin America will grow. Our long-term, mid-term forecast for Latin America continues to be in mid-single digits, 4 to 6% demand, compounded annual growth rate over time for appliances. Having said that, and to your point, Q1 was very, very strong in Latin America, double digits up. And part of that was due to government incentives, which have been extended now into Q2. So with that kind of increase in demand in Q1 and expected in Q2, we're quite confident that Latin America is going to be positive this year.
You said it's all about boosting your productivity. If you are seeing stronger demand in emerging markets in Asia or Latin America, will you then perhaps boost your presence in those places to make up for weaknesses in more developed Western markets?
Clearly, part of our strategy is to participate in the growing demand for durable goods in general, and obviously appliances in particular, and the growing middle class around the world. So as you know, there's 70 to 80 million people a year globally entering the middle class, which means they're forming households and moving into apartments and houses and therefore buying appliances. So most of that, as you know, occurs in the emerging growing markets of Latin America and Asia and Eastern Europe and Middle East and Africa. And we are diversifying our presence in about 150 countries around the world to take advantage of that growing middle class, yes.
And in North America, I know that you said your price increases are having a positive impact, but can you be more specific in terms of how much an improvement you expect to see in the U.S., say in the U.S. market specifically, by the end of 2012, given that it's been tough times for consumer confidence?
Yes, I think actually the U.S. market has been challenging for sure. I will say related to our business, of course, appliances, is we're very much connected to the housing market, which has been very, very challenging in the U.S. for the last 3 or 4 years. We are starting to see some positive signs. So as we start to see multifamily housing pick up, which is usually the first part, so people in apartments and people in condominiums. So we're seeing multifamily housing improve. We're seeing housing inventory start to come down, which is a key component to this. And And the National Association of Home Builders for single-family homes is forecasting an increase, a year-over-year turnover increase of 16%. So we still got a long way to go in the U.S. housing market, and therefore its impact on appliance demand. But it's starting to move. It's moving in the right direction.
Okay.
So that's kind of the overall market picture. And in terms of our pricing, we've had good implementation after many months here of getting the prices through. We're seeing that in Q1, and we expect that'll continue through the year.
Keith McLoughlin, thanks for talking to us about the problems and prospects for your company, Electrolux, in the year ahead, the world's second biggest appliance maker. Thank you for joining us from Milwaukee this morning.